Of course, one of the reasons why everyone is talking about CoreWeave stock is because it's up over 318% after IPOing this year in 2025. But I think there's more to it than just a significant price increase. I think investors are attracted to the company, the growth rates in revenue and profitability, the business model, and the fact that it's an AI company and artificial intelligence is one of the fastest growing markets worldwide. And so I'm going to discuss a little bit more in detail why I think everyone is talking about CoreWeave stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So CoreWeave management team said that over the past 5 years, we have invested significantly in building the cloud platform and scaling our infrastructure while repeatedly demonstrating industry-leading performance. The company saying that they generate revenue by offering world-class AI infrastructure and proprietary managed software application services through our CoreWeave cloud platform. And of course, this has been a section of the market that's been growing almost unabated. Demand for these types of services exceeds supply, and you've had companies like CoreWeave and others building capacity almost as quickly as they can responsibly build capacity because demand from enterprises is absolutely insane. The vast majority of their revenue comes from long-term committed contracts, providing us with strong revenue visibility and attractive unit economics. And when you're doing this kind of business model, which is they spend a lot of the money upfront to build these data centers optimized for AI, and then they rent it out so they get a smaller fraction of the revenue than they put up front, it helps to have long-term committed contracts because you can secure the facility, the building out of the facility with the long-term contract. It helps you get financing. It helps investors be more comfortable with investing in this kind of a business model. It helps you get lower interest rates from lenders. And it helps you plan for the future because you know, okay, I've got this much in committed contract. I can make these kinds of moves based on the fact that I have this much in committed contract. And then I expect that in the future, I might get these new contracts as well. But even if I don't, I know I have this core that can serve us until we get newer contracts. Speaking of newer contracts, their revenue backlog, which includes remaining performance obligations, plus other amounts they estimate will be recognized as revenue in future periods, came up to $259 billion, which was up 63% year over year. And I'm going to make a note here. I don't think it was actually $259 billion. I think it was $25.9 billion. And I think the transcript of this was incorrectly transcribed. Correct me if I'm wrong, but I think that's the case. I think it should be 25.9 and not 259 billion. But the increase in 63% year over year, I believe is correct. And the fact that they're growing RPO by 63%, which again, the company says is going to eventually turn into revenue, is a great deal. They also recently signed a $4 billion expansion with a large AI enterprise. And that expansion was signed in the second quarter, and that'll be reflected in the backlog numbers for Q2. So those are not included in those backlog numbers I highlighted earlier. So this is additive to the Q1 ending revenue backlog of 25.9 billion. And this is why I think the above number should have also been 25.9 billion because it says 25.9 billion in this section here. So I've received two conflicting numbers here from the management team, 25.9 billion and 259 billion. And I'm going to assume 25.9 billion is the correct sum because 259 billion is the kind of revenue backlog that Microsoft has. And Microsoft is a much larger company than CoreWeave. And I don't expect CoreWeave to have that much in backlog revenue already. So the company saying that customer demand continues to grow at an outsized rate, and they are ramping their investments in data center and server infrastructure to meet that demand. Already, they're profitable on an adjusted operating income basis. Their adjusted operating margin in Q1 was 17%, which was up 3 points year over year. And the Loss on the bottom line increased, but that was driven by the one-time stock-based compensation expense that happens when a company IPOs. So excluding that, which is not going to repeat continuously, excluding that, the company's net loss on the bottom line would have been significantly smaller. They went on to say that as we scale our business further, we expect to continue lower our cost of capital, and as of March 31st, we had $2.5 billion in cash. And this usually happens with smaller companies as they grow in size, their cost of capital decreases if they manage the business effectively. And given that the business model for CoreWeave is to have longer term customer contracts and only undertake massive capital expenditures if they have that long term customer contract to support that expenditure. For instance, they won't build a new data center, if I'm understanding their business model correctly. They won't build a new data center unless there's a big anchor client that's going to consume a large amount of what that data center output could potentially be. And so they won't just build something new just for the sake of building something new to grow. They'll build something new if they know they have a customer that wants a large part of that output, and then they'll build something new. At least I'm thinking 20%, 25% of the total available output of that new data center, they like to have secured in a customer contract longer term before they build that data center. And then they can say, all right, we've got at least this much of it secured. And then if we can get an incremental 50 or 60% of consumption sold, then that investment will be very lucrative for us as a business. And the way demand is going for these types of facilities, they're selling out. Like the facilities are sold out. The demand for artificial intelligence compute is selling out. And so companies like CoreWeave are more concerned about building that new capacity as cost effectively as possible because demand from their enterprise customers is already there. They're already getting phone calls almost every day of the week asking, do you have something more available? Did someone else cancel? Can we step in? Make sure to tell us if somebody cancels. We want to be first on the list. Call us first because we're ready to sign if somebody gives up their spot. That's the kind of demand we're seeing right now for this kind of AI infrastructure. So a lot of these reasons are why investors are talking about CoreWeave stock. It's already up so much, and the company is still in the very early stages of growth. It's backed by and partnered with some of the largest AI companies, including Microsoft and NVIDIA. So it's a very interesting company, and I can understand why so many investors are talking about this business. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.